You were listening to Charting Wealth's Training and Trends for Tuesday, July 28th, 2015. The training's going to start out on what we are learning today from just looking at SPY. That is, of course, Standard & Poor 500. This is an ETF, an exchange-traded fund that tracks it. We always draw our two-day trend line. We can see that was breached back on the 22nd in the afternoon. And since then, the market has continued to move down. It actually breached that trend line about the same time that it had crossed over the MACD going down. That is a big signal for us. But what we're looking at today and what we're doing as our lesson is we're learning how important it is to watch for bottoms. Now, what is a bottom? Well, that is where a stock stops going down. When I say stock, you can read into that an ETF, you can read into that anything you want. We're using our Japanese candlesticks, and we, of course, are looking for a bottom. Now, what do we see happening here? Well, we've seen somewhere around 206.81 on SPY is where it rested throughout the day on the 27th. What does that mean? Well, it may mean nothing. It may mean that the market just moved down in the morning, had kicked back up in the afternoon, and had moved on down and stayed around the same level, right at 106, close to, 106, almost 107. I'm sorry, 206, almost 207. We're going to pay attention to that. Why are we going to pay attention to it? Because it can be a potential level of support. One thing we always do when we're looking for levels of support is we go in and we run a horizontal line out to see if we have any place where the market had previously stopped. We can see something around 106.17 back in late June, but really we don't see a great deal of support. Where you start seeing a whole bunch of levels of support over time, that gives you more to possibly hope on. Why do we care about levels of support? Well, where we can find the market stopping on the way down and turning to go up, and where it's occurred over and over and over again, we can, of course, look to that as being potential levels of support, so we know when to get in when the market's bottomed out, when it starts to move off that. Now, if it continues to trend down, that level could be blown, but we're going to pay attention to right where the market ended on this 4-hour chart over the next couple of days. If it moves on past it, it's done. But if it doesn't, that's very important to look for. Now, what else do you do when you do that? Well, you also want to go to your bigger chart, and you also want to see if somewhere around 207 or so you see any other support. And you see some support back on the 9th of June. There was some support around about 209, some support in there. Does it range back any further? Well, there was some support around 209 back in May, and there was no real other support anytime near in time. But let's pay attention to those things. Well, in fact, there was some support around 209 also back in March and also back in April. So let's just watch it, see if we see anything rack up there, and if the market stops on its down move. If that happens, then that is definitely something we want to pay attention to. Now, that's our training for today. Let's talk quickly about where the markets are. IYY. The two-day trend line is down. It crossed over on the MACD over the last couple of days. Also, the 4-hour chart has hit a double bottom. We were just talking about that, not only on the IYY, which is the total market, but also on the SPY. Additionally, the SPY is pretty much tracking the same kind of thing that we are seeing in the IYY on the two-day chart. You can see it has moved down over the last couple of candles, hasn't quite yet crossed over on the MACD going down. Again, we see a double bottom over the last day on the 4-hour chart. What has the Q's been doing? Well, the Q's has crossed over its two-day trend line. That is the blue line that we've drawn here. And it has not yet, however, crossed over on the MACD, so we don't have a confirmed down move. Also on the Qs, we see the same kind of double bottom on the 4-hour chart that we saw on IYY and SPY. Now, lastly, let's talk quickly about what gold has done. Let's look at the 2-day on gold. We can see that gold has been moving down. We have 3 good downward candles on gold. Each one of those candles represents 2 days. And we also have gold over the last day. It has basically, looks like it's bottomed out over several days. It's not gotten any lower than 103.79, and it's crossed over going up. However, it's still well below the 2-day trend line. So gold is in a downtrend, but hopefully it might be bottoming out here. We'll continue to pay close attention to that. You can also see on the 2-day candles, it's been around 104. So keep an eye on gold in that regard. Now, if you are interested, all you need to do is email us at cw@chartingwealth.com if you want to subscribe to our daily review. We limit this only to serious investors, and we need to hear personally from you at our email address if you would like our help in helping you track the market and figure out what the real trends are, what's really going on, and of course, how to invest your money in the 3 indexes that we follow, and gold. Again, serious inquiries only. cw@chartingwealth.com. Thanks so much for listening. Hope that you have a great day in the markets. Join us tomorrow for more training and more trends.